Right, so after analyzing your financial plans, Denali, first we need to find out more about your bank. Find out you need to help us find out more about your bank, and you need to research the rates and all the services it offers.
And you need to find those Microsoft shares.
Okay.
Definitely. Worst comes to worst, if you can't find them yourself, hire someone to. There are people out there professionalized in that.
And when you do find them, I'd recommend likely holding on to them, because Microsoft is a very, very sturdy company. But it may not go up much. It's not going to go down much either, because it's a so-called blue chip stock. But it may be worth considering selling that and reinvesting it in a stock that has more opportunity for growth.
That, or you could just use it as the core of a diversified portfolio that you invest in later with your income. Anyway.
And with income possibly from the savings bonds when they mature. Which I also recommend holding onto the savings bond until they reach their maturity. Because selling them now, you'd get more later, more profit, more money later. But for now, hold on to them, and if an emergency arises, possibly with Campbell's sick mother, then you can use that to take care of her.
That and the Microsoft shares, since those are liquid assets.
Earning 5%, and our interest rate on our loan is 8%. So is that good? I mean, that's what we should do, is hold on to those?
Well,
if that is the case, you probably should not. You should sell them and pay off the loan, or pay off that, especially the credit card debt. Credit card debt now is upwards of 17%. So you need to pay off that immediately, either with the money from the bonds, or from your savings account, or from your income.
Just any way you can, really.
The college loans, though, those you can just pay them off gradually, but sooner rather than later is preferred. That would be better for you.
Use some of your income to pay off that too, rather than just paying the minimum.
And now for the credit union, I understand you have Campbell, you have a relationship with the credit union since your sophomore year in high school.
Yes.
But
Banking relationship. Oh, okay.
she's had an account with them for 6 years.
Yeah. Well,
but credit unions, they're good. They're local, but they don't have a ton of services. They have some, which may be enough for you, but it may be worth investigating, looking around there's at least 4 other banks in your area, looking at their offers, their CD rates, and all their options, possibly college savings accounts for the children you may be having sooner.
Yeah, we're in a capitalist society. You have a right to shop around for the best deals at banks.
And then so you should probably also take the money out of the 2 banks and combine them into a joint account at either Denali's bank or another bank based on the interest rates they offer.
And keep that around as an emergency fund for mom or whatever arises. Since you never know when you're going to have a car accident and you need $2,000 instantly.
How much should we have in savings?
$3,200.
Combined.
No, how much should we have?
Oh, should we have? Difficult question. More the better.
You should save at least 10% of your income straight off before you even consider buying anything.
Yeah.
Just take 10%, stick in the bank, minimum.
Forever?
Yes.
Well, until you're ready to retire at least, and then.
Well, then you don't have the income to put.
Oh, true point. But then, yeah.
That credit card's okay for you using that credit card?
Well, use it as long as you pay it off in full at the end of every month. I mean, it's good for the credit score, but you not want to keep any debt on it.
And then possibly look at other credit card interest rates. I don't know what your interest rate is, but possibly there may be some better offers.
Yeah, like for cash back and all
If you pay
that
it off
stuff.
every month, it doesn't matter.
Well,
This is
like
true.
cash back offers and all for stuff like that. Just look around. Again, capitalist society, you can look around for
And there are also some credit cards where, like, wherever you spend them, money goes into the college savings account for the children that you may also be planning on having.
If we do get rid of the credit card, what would be the best way to start the college savings for our new family?
There are many state or federal government-backed savings accounts,
like 529 plans.
and they're also like just CD. Like you also don't have to have a specified college savings plan. You can just do a 5-year CD or a longer-term option.
I mean, or you could just do rolling CDs of like 6 month, 1 year, 2 year, 3 year, 5 year, so that one of them is always maturing in case you need emergency funds.
What about insurance? Do we need life insurance? And if so, how much?
You need life insurance. I recommend that you have enough that if one of you, something unfortunately happens to you, the other one can continue to live reasonably for several years. Or if it's in the case of an injury, workers' comp, so they can work, they can live reasonably enough until you can get back to the job.
So what's that number? I mean, is there a rule of thumb, or should it be whole life or term?
Probably term, since if you're going to be saving for retirement, those funds can be used in place of the life insurance. So, but you pretty much need the term life insurance until you have that up and running.
Okay.
But yeah, you don't need to buy too much, since overall it typically isn't a good investment, but it's just there for emergency.
You don't want enough insurance that if unfortunately one of you dies, the other one doesn't have to work the rest of your life. That's too much. You're not going to need that much. You're just going to pay out your money now.
Don't buy enough to make the cops suspicious. That's always a good rule of thumb.
And if we're setting aside 10% of our income towards savings, how would you recommend distributing that 10% to maximize our return?
A diversified portfolio with bonds or savings accounts or CDs or maybe even money market.
Like mutual funds, I'd personally just say mutual funds, since it's pre-diversified. You don't have to worry about any of it. And they're typically lower fees than most brokers.
You could also talk to a full service or discount stockbroker and talk about, that's me.
Oh,
right? No, we're not.
What about gold?
Gold?
Inflation.
Gold right now is really high. It's at the highest it's been in a long time. It's probably not going to keep going up much. I mean, if you have any gold now, sell it, but I wouldn't recommend investing in it.
Yeah, I mean, if you invest in gold, you're just chasing after something that's already gone up. That's how most people lose money in any market. Do you have any questions?
Thank you.
Good.
Okay.
Nice job, guys.
Thank you.